Let's bring in Jim Rogers, CEO of Jim Rogers Holdings. Jim, very glad to have you with us for the next half hour or so. Let's just start with UBS. We were just talking about these numbers this morning looking decidedly worse than anticipated, and they're still seeing net outflows from their key divisions. What does a company like UBS do, and what's your take on it?
Well, I'm one of the people who took my money out of UBS. I met with the CEO of UBS, and I couldn't believe what he was saying to me, so I took my money out of there.
What was he saying?
He was trying to tell me that the balance sheet was good. I kept showing him the numbers. I said, what are you talking about? He kept giving me all the PR answers, and when I either realized he was treating me like one of the PR people told him to say, or he didn't know what he was talking about. So in my case, I took my money out of there. And my family's money out of there.
Well, but of course, it's not just the UBS issue, though. I mean, the weakness that we're seeing in the banking sector isn't only on certain banks. It's quite blanketed, and it's not just UBS that's also going through cost-cutting measures and trying to rein in spending and revamp themselves. Are we going to emerge anytime in the near future with a completely new banking model that'll actually work?
Well, of course we are, Louisa. It's not the first time in the world that investment banks and commercial banks have gone bankrupt. I mean, this has been going on for hundreds of years. What always happens is people get sloppy, they start making mistakes, they go bankrupt, they decline and go bankrupt. But at the same time, there are new people arising. In America right now, there are lots of banks that did it right, people who are sound and solid, who've been waiting for this. Investment banks as well, and in Europe and in Asia. It's been going on for hundreds of years.
Jim, good morning. Guy Johnson. Do I have to treat bank stocks at the moment a bit like options?
Well, I wouldn't buy any bank stocks, Guy, if I were you. I'm still short the investment banks in the United States. Some of them may survive, but why bother?
But the volatility is enormous, isn't it?
Well, if you're a good trader, and I'm a terrible trader, I'm the world's worst trader, but if you're a good trader, I'm sure you can buy XYZ at 4 and sell it at 6. Do it, but I'm not good at that.
Hi, good morning, Jim. It's Martin here. I'm fascinated to hear what you're saying, because history shows that over the long term you have probably gotten more calls correct than a lot of other investors out there. There's no question about it. But it's just interesting for many of us that, by your own admission, the short-term views are sometimes too difficult to predict. Were you maybe astonished by the rapid decline in commodity prices in the second half of this year and again into this year, considering some of the dynamics that you might have thought would support it?
Well, we've had a period of forced liquidation of everything. As you well know, Martin, you report on it every day here on CNBC. It doesn't matter about the fundamentals. You're getting margin calls, you're getting redemptions, you're losing your credit line. So we've had a forced liquidation of everything. Even the U.S. dollar is going up because all the shorts are being forced to cover. Did it go down faster than I thought? It certainly, everything went down faster than I thought. But the fundamentals of commodities are improving during all of this. The fundamentals of Bank of America are not improving. The fundamentals for General Motors are not improving. The fundamentals for commodities are improving. Some farmers cannot even get loans for fertilizer right now. You know, nobody's going to get a loan to open a mine. You're not going to see any mines of any kind open in 10 to 15 years now. So the fundamentals continue to improve.
And I guess secondarily, Jim, are you surprised at all that the U.S. dollar has seemed to have found its footing, despite the fact that the government is extending the balance sheet in ways that I know for sure that you're not happy about? You have been famously bearish on the U.S. dollar, yet it seems to defy gravity. Do you think this is a temporary thing that will come evident once the forced liquidation that you talked about ceases?
Oh, no, absolutely. No, I've certainly explained on CNBC several times that I expected a rally last year in the dollar. I thought I would get out of all of my dollars last year, Martin, on the rally. I didn't, because it's been much stronger than I expected, because there is this massive forced liquidation. There are huge short positions in the dollar. Everybody's having to cover, and I haven't sold the rest of my dollars yet. I suspect I'll do so sometime this year, but who knows? It could go on another year for all I know. Same thing is happening with the yen. I own the yen, as we've discussed before here. I'm not selling my yen yet, but it's an artificial rally too. Somewhere along the line, I'll have to get out of my yen. And I hope your next question is, well, what are you going to do with your money then? And I'm telling you, I don't know. I'm trying to figure it out.
Do you, Mr. Rose, it's Neil Dwayne. I'd just like to go back to your view on the financials, if I may. I'm intrigued at the level that you meet policymakers and governments and chief executives of whether you sense that the banking industry almost globally now has started to put in place the appropriate corporate governance. It seems to me inside a lot of the banking issues, whether it's Bank of America, Merrill Lynch, or our own Barclays, Royal Bank of Scotland issues here in the UK, that the non-exec directors, the external auditors, and to some extent the regulators have just not got a grip in the last 2 years of what's been going on in financials. I'm just interested in your sense of whether we're now getting a grip in terms of corporate governance of this industry, or are they still just spiralling off doing their own thing and hoping that the taxpayer writes the check?
No, well, they're not. The corporate governance is not what I would call is happening. What's happening is they're all panicked. They're all cutting back everything, trying to see what they've got. Many financial institutions still don't know what they have. AIG doesn't have a clue what they've got. Fannie Mae doesn't have a clue what it's got. Some of the American banks don't have a clue yet what the real situation is. So in the meantime, everybody's frozen trying to figure out, okay, what are we worth? What can we do? One reason the banking system is frozen up is because nobody trusts anybody else. If I came to you and said, I'm worth $10 million, and I showed you my financial statements, and you said, Jim, we know those are false. We know those are phony. You wouldn't do any business with me. Well, that's what's happening right now.